Welcome back. The Santa Claus Rally has officially arrived, and it is delivering exactly what the bulls ordered for Christmas. If you were waiting for a sign that risk appetite is alive and well as we close out 2025, the price action in this shortened trading session says it all. The S&P 500 did not just drift into the holiday, it powered through resistance to set a fresh all-time closing high, riding the momentum of an economic report that has completely reshaped the narrative for 2026. We are watching a market that is aggressively pricing in a no-landing scenario. The catalyst was yesterday's delayed third-quarter GDP print, which showed the U.S. economy expanding at an annualized rate of 4.3%. That number is still reverberating through trading desks today. It is significantly hotter than the 3.3% economists expected, and it proves that the consumer is not just surviving high interest rates, they are thriving. This matters to your wallet because it validates the earnings growth thesis. Investors are no longer just hoping for a soft landing, they are betting on an economic reacceleration. Let's go to the dashboard and look at the numbers for Wednesday, December 24th. Wall Street closed early today at 1 p.m. Eastern, but the volume was surprisingly robust for a holiday session. The S&P 500 finished at a record 6,935, adding roughly 0.3%. The Dow Jones Industrial Average kept pace, climbing over 150 points to close at 48,646. The tech-heavy Nasdaq Composite outperformed slightly, pushing up to 25,631. In the commodities and bond markets, we are seeing a fascinating divergence. Gold is continuing its historic run, trading near an all-time high of $4,488 an ounce. Silver is following suit, holding firmly above $72. Usually, when you get a hot economic report like we saw yesterday, yield spike in gold sells off. But today, the 10-year Treasury yield actually dipped to 4.16%. This tells us that while stock investors are cheering growth, bond investors are quietly hedging against long-term inflation. Over in the crypto markets, the digital assets are taking a breather while equities hog the spotlight. Bitcoin is consolidating around $87,300, down fractionally as traders book profits for the holiday. Ethereum is hovering just below $3,000. The lack of a major breakout in crypto today, despite the risk-on mood in stocks, suggests that institutional capital is currently rotating back into traditional tech and industrial names to capture this GDP-fueled rally. First up, we have a massive shakeup in the energy sector that marks the end of an era for a legendary brand. BP officially announced today that it is selling a majority stake in its lubricants business, Castrol, to the investment firm Stonepeak. The deal values Castrol at over $10 billion. This is a strategic sledgehammer from BP's leadership. By offloading this legacy asset, they are instantly unlocking billions in cash to pay down debt and pivot faster toward their integrated energy transition. The stock popped 2% on the news, signaling that Wall Street agrees with the decision to slim down. Our second story is a breakout moment for the agentic AI trade. Shares of UiPath surged over 8% today after it was announced that the company will be added to the S&P Midcap 400 index, effective immediately. But this is about more than just passive index buying. It validates UiPath's transition from a simple bot maker to a leader in AI agents. Software that doesn't just copy clicks, but actually thinks and executes complex workflows. This inclusion comes hot on the heels of their first profitable quarter, proving that the AI hype is finally turning into GAAP earnings. Finally, we have a reality check for one of America's oldest tech giants. Shares of Intel stumbled 2% today, diverging from the broader chip rally. The catalyst was a report surfacing this morning that Nvidia has paused a critical testing phase for Intel's new 18A foundry process. This is the crux of the bear case. Intel has rallied 86% this year on the hope that it can become the factory for the world's best chips. But hope is not a contract. If Nvidia, the most important customer in the world, is hesitating to use Intel's factories, it casts a long shadow over their turnaround strategy. Looking ahead, markets are closed tomorrow for Christmas. When we return on Friday, the focus will shift entirely to the consumer. Traders will be watching for any post-holiday retail sales updates to see if that 4.3% GDP growth is translating into a record-breaking holiday shopping season. If the consumer data confirms the macro data, we could see the S&P 500 make a run for the psychological 7,000 level before New Year's Eve. That is your update for today. Enjoy the holiday, and we will see you back here on Friday.